Hi guys, it's Linton here. So we're just going to have a look at a couple of charts today and see where we stand with the Nasdaq, the dollar index, and the S&P 500. So let's get into it. First thing that I want to do is I want to have a look at um, some news that came out, positive news. So we've got global stocks rise as Beijing ceases or eases COVID restrictions. So that's really good for the markets. I mean, China's like the world's second biggest economy, so they're opening up public transport, etc. That can be good for the economy, and this would be part of the reasons why we've seen a rise in stocks. That said, the market is still moving based on fear. We have, however, moved from the extreme fear range back into just fear. So a little bit of improvement there, some stability coming back. Be nice when we get back up to this neutral range. We should see some really positive moves in the stock market if we get there. Something to keep our eyes on. This week we've got CPI coming out. CPI is a consumer price index, and it measures the change in the value of goods, or the change in the purchasing value of goods. So, in other words, what consumers are spending on their goods and how much those prices change. This is how we measure inflation. Okay, so if we have a look here, we can see, over the last couple of years, average inflation has been around about the 2% mark or just below. And recently, in May, we started seeing a big uptick in inflation in US figures. So obviously, with inflation going up, that changes yields. Higher yields mean that people will move away from the stock market. So what we need to see if we want to see this correction that we're in the stock market is what we want to see is inflation that has peaked and we're starting to see a pull off. So at this point in time, if we have a look at inflation figures, we can see that it looks like there is a little bit of a downward move on these inflation figures coming, but it all depends on what comes out on June the 10th. So, are we going to see this forecast figure hold? Is the result going to be higher or is it going to be lower than that? And that will obviously give us an indication as to whether the Fed has had an impact on the current situation. In April, and this is important to note, in April we saw a result that was an actual result that was worse than the forecast. Okay, and everyone was expecting that to have an impact, but obviously this figure was still, although worse than what was forecast, it was still higher than the previous figures that we'd been seeing. So inflation was still on the rise, which meant that this figure, although worse than forecast, was actually still good for the dollar. And that's why we've seen the continuation in the dollar value. Then we saw on May 11th this figure come out, which was 6.2%. Yes, it was higher than the forecast, but it was lower than the previous figure. So are we seeing a change in the inflation? Are we seeing it having peaked because of the increase in interest rates and perhaps a decrease from there? So in other words, if we do see the forecast figure hold or even hopefully a lower figure than that, that would mean that the Fed is starting to have its effect in terms of the interest rate increase that they've made so far, and that would bode well for the stock market. Let's have a look at the dollar index, and this is a very important chart to have a look at. And the reason for that is because, as we can see here, and I've mentioned this a number of times, we've got this 61.8% retracement, right, from this point to this point. Okay, the high and the low, swing high and low. With that 61.8% retracement, we saw a couple of months. Now, remember, this is the monthly chart we're looking at. We saw a couple of months over here close above it, and then price pulled back significantly. We saw price test this level again above the 61.8 and pulled back significantly. Then what we've seen over here is we've seen another instance where 2 months have closed above the 61.8% retracement level. And I did mention that that would be a key thing in deciding whether or not we're going to see strength in the dollar. What I find very interesting is last month, May, closed on the 61.8. In other words, what we could be seeing there is resistance, which became support. Okay, if that is the case, it's possible that we're going to see the dollar extend its value up to around about the 110 mark. If that is the case, and we don't see some kind of relief first, that's going to be bad for the stock market. We're going to see the indexes come off quite hard, and we'll probably see that next wave down, which I'll get to in a minute or two. So this is a very, very important thing that we're watching at the moment here. This month and how it plays out is going to be very, very important. Does this resistance level over here hold, and we see some kind of relief before the move back up? Or is this a bull trap on the dollar, and we're actually just going to see it move all the way back down to this support level over here, this structure over here? So that's something that we need to keep our eye on. The next thing that we're going to have a look at is the VIX. Now, for those of you that don't know, the VIX measures volatility in the market. Okay, so the higher the volatility, the worse it is for the stock market. The lower the volatility, the better it is for the stock market. So as we've seen here, we've seen a bit of a pull-off recently, and that's why we saw a bit of a rally in the stock market. Okay, the VIX is now at a level at 25, which is kind of in no man's land, right? So we need to see it either move back up to the high 30s, or what would be very nice for the stock market is if we see it move down to sort of the 20 mark. So where it's sitting currently is kind of a no man's land. It doesn't bode well or badly for the stock market. If we see it pull off from here and we start seeing it go back down to the 20, that would be very nice for the stock market, and we will see some relief there. So let's move on to the Nasdaq itself. The first thing we're going to look at is the futures market on the Nasdaq. Okay, we are still currently in an overall downtrend, as we can see here by the lower highs and the lower lows that have formed. So we are still in this downtrend currently. But those of you who have been following me for some time will know that I called this level, I think it was in March somewhere, where I said that that is a nice level in terms of a three-wave move from the top. And we've got A to B equaling C to D, which is very nice. It ties in very well with the overall picture. What we're seeing at the moment, right? This structure is going to determine whether or not we go back up to this resistance trend line, or whether we continue down and break lows and go down to the 61 before things turn. I believe that if we get a break out of this low here, obviously this support level is going to be very, very important. Any close below that on a daily, and I believe that we will see the 61.8, 10,500 on the Nasdaq before we go back up and break the highs. That is still on the cards, guys. Although I am bullish at the moment, that is still on the cards. This structure over here is going to be all important for us in determining whether or not we are going to see higher levels first before we test again. So let's have a look at the 4-hour chart, and just what I'm watching here on this structure is quite important. Looking at this wave setup here, we could be seeing the formation of a pennant. Okay, and if we see the formation of a pennant with the target up the top there, it ties in very nicely with a three-wave move. So in other words, what we would see is we'd see an impulse, a correction, and then an impulse. And these two impulses are pretty much the same length. So that target ties in very nicely. Okay. Alternatively, we could see a break of this level to the downside. And if we see that, we've got to see what happens here. Do we get a reversal, or are we going down to the 61.8? I just want to shoot back to the daily quickly on the NASDAQ. And the reason for that is because I just want you to get a full view of what I would be expecting to see should we see the bullish scenario unfold here. And that's obviously what I'm hoping for. I'm hoping to see this impulse, this corrective structure, and then the second impulse that will take us up to this resistance line over here. Once we're at this resistance line, and I've mentioned this a few times, we will need to see what happens there. Remember that I'm just talking about the bullish scenario right now. So at that point, if we see price give us a smaller correction and a break of that to the upside, I'm happy to say that we have completed this correction and that we are going up from this point. My targets are a lot higher, should that be the case. Alternatively, what we could see is the price pull back from this level, give us another structure and a break of that structure to the downside. That would then bring us down to this level over here, the 61.8. If we see that from the 61.8, that would give us a nice 5-wave structure on this full correction. And from that point, I'd be quite happy to say I'm adding into my positions and I'm looking for the upside from there. I think it's quite important for us to also compare the futures with what's going on the Nasdaq itself. And the reason for that is there's been an interesting development here on the Nasdaq that hasn't shown on the S&P 500. And what I'm talking about is this little gap over here. Okay. Now, as we know, gaps act as magnets. So what we could see is we could see the fact that this gap needs to be closed first before we see upside. This isn't on the S&P 500, this gap. So this is unique to the Nasdaq at the moment. We could see the price pull down to close that gap first before we see some further upside. So just got to keep our eyes on that gap as well. I'm not going to get too nervous if I see price pull off a little bit at this gap mark. And the interesting thing is that I called that level, I think it was last week or the week before. Let's just check exactly what the level is. 12,350 was the level that I gave, which was a retest level I'm expecting to see on the NAS. And that ties in with this gap over here exactly. So that would be a level that I'm keeping my eyes on. If price retraces to there, I'm not going to be too concerned about it, being that I got into my trades over here and I'm holding that position. We'll see what happens. If we do get a pullback from there, we could see something like a bit of a structure, pull back down to close the gap, and then the breakout to this upper trend line, which is what I'm hoping to see. The last thing that we're going to take a quick look at is the S&P 500. So just to bring your attention to the fact that we didn't see a gap here on the S&P 500. We are seeing the same sort of structure formation over here. We do also have this trend line to keep in mind. So we could see exactly the same kind of setup as where we have this impulse, a corrective structure, and a second impulse to hit that resistance over there. Let me just draw that a little bit better for you. So we could see this kind of setup, and at that point we would need to see, are we breaking and going higher, or are we coming back and going lower? If we're going lower, S&P 500, 3,500 is on the cards, 10,500 on the Nasdaq. Guys, if you liked this video and you found it useful, please give it a thumbs up and subscribe as well. I hope it helps with your trading setups and with you understanding the bigger picture on the market. I'll see you guys again tomorrow. Take care. Cheers.